Hey everyone, welcome back to Corporate Decoder. Today, NWS just filed an 8 confirming their ongoing stock repurchase program, and I am seeing a clear signal about how they're managing shareholder value. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing confirms they are actively buying back their own stock, and this is a move that can really benefit investors if done right. So, News Corporation, the company behind many familiar media brands, is letting us know about its stock buyback program. They are authorized to buy back up to $1 billion worth of their outstanding Class A and Class B common stock. This isn't new news entirely. They've mentioned this program before. What this filing does is provide the official update and confirmation, especially for regulatory purposes. Now, why is this an 8K filing? Well, it is about transparency because part of their business is listed on the Australian Securities Exchange, or ASX. They have specific reporting requirements. They have to tell the ASX every single day if they have bought back any shares under this program. This filing essentially bundles up the information they'd be providing to the ASX and makes it publicly available here in the US through the SEC. They also mentioned that they put this information in their regular quarterly and annual reports. This 8K is more of a real-time update, confirming the continued activity. Let's break down what this repurchasing actually means for you as an investor or someone interested in how companies manage their stock. When a company buys back its own shares, it is essentially reducing the total number of shares available on the market. Imagine a pie. If there are 10 slices and you own one, you own 10%. If the company buys back 2 slices, now the pie has 8 slices, and your 1 slice is suddenly 12.5% of the pie. Your ownership stake increases without you doing anything. This can also potentially boost the stock price. With fewer shares floating around, demand can outstrip supply, pushing the price up. It signals that management believes the stock is undervalued, and that buying it back is a good investment for the company itself. It is a way to return value to shareholders. The filing also includes a standard bit of legalese about forward-looking statements. This is super important and something you'll see in almost every filing. They're basically saying that when they talk about their plans to repurchase stock, these are not guarantees. They are based on current expectations, but things can change. Factors like changes in market price, general market conditions, and even new investment opportunities could affect their ability or desire to continue repurchasing shares. They also state they have no obligation to update these statements if things change later on, which is pretty standard but worth noting. This particular filing is straightforward. It is not a deep dive into their financials like a 10Q or 10K would be, which are packed with detailed financial statements. This 8K is purely an informational filing to announce ongoing corporate actions related to their stock. The attachments Exhibit 99.1 and 99.2 would contain the actual daily disclosures made to the ASX. These would detail the exact number of shares repurchased, the price paid, and the dates. Since we don't have the full content of those exhibits here, we're relying on the summary provided in the 8K itself. And as usual, the report is signed off by an authorized officer, in this case, Michael L. Bunder, who holds a senior position within the company. Looking at this filing in the context of recent news, we saw headlines back in April about News Corporation announcing a share buyback program. This 8K confirms that this program is not just an announcement, but an active, ongoing strategy. When a company like News Corp, which has diverse media and news assets, decides to spend $1 billion on buying its own stock, it suggests a few things. First, management likely feels that their current share price doesn't fully reflect the company's underlying value or future prospects. Think about it like this. If you own a business and you believe your business is worth more than what people are offering to buy it for on the market, you might start buying back your own stake to increase your ownership percentage and bet on its future growth. This is what News Corp appears to be doing. It is a classic shareholder-friendly move. A stock buyback program can be a powerful tool for boosting shareholder value. By reducing the number of outstanding shares, it can increase earnings per share, which often leads to a higher stock price. It also shows confidence from the company's leadership, indicating they believe the stock is a good investment for the company itself. News Corp is a well-established player in the media industry, and using their capital to repurchase stock is a strategic decision to enhance shareholder returns, especially if they see opportunities to buy their own shares at attractive prices. The risk, however, as with any forward-looking statement, is that the company could face unexpected challenges if market conditions deteriorate significantly, or if new, more pressing investment opportunities arise, they might scale back or even halt the buyback program. It is a sign of confidence, but not a guarantee of future stock performance. What I am actually looking for is to see how consistently they execute this buyback and how it impacts their earnings per share over the next few quarters. This filing just confirms the program is active, but the real story will be in the follow-through and the financial results it helps to generate. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this video helpful, please hit like and subscribe and join our community in the description.